Hi, I'm Vineet from Clear Tax. In this video, we will understand the taxation of capital gains and dividends earned from mutual funds. The rate of taxation of capital gains of mutual funds depends on the type of mutual fund and holding period. Mutual funds are broadly categorized into equity funds, debt funds, and hybrid funds depending on the equity exposure. Those mutual funds whose equity exposure exceeds 65% of its total assets are termed equity funds. Debt funds are those funds whose equity exposure is less than 35% of its overall assets. Let's now understand the taxation of capital gains of equity funds. If you sell equity fund units within a period of 1 year, you make short-term capital gains. These gains are taxed at a flat rate of 15%. You make long-term capital gains if you sell your equity fund units after a holding period of 1 year. Long-term capital gains of up to Rs 1 lakh a year are made tax exempt. Any long-term gains that exceed Rs 1 lakh are taxed at the rate of 10% with no indexation. Let's now understand the taxation of capital gains of debt funds. You make short-term capital gains on selling your debt fund units within a holding period of 3 years. These gains are added to your overall income and taxed as per your income tax slab. You make long-term capital gains on selling your debt fund units after a holding period of 3 years. These gains are taxed at a flat rate of 20% after indexation. Let's now understand the taxation of hybrid funds. Hybrid funds whose equity exposure is more than 65% of its assets are taxed like an equity fund. If not, then it is taxed like a debt fund. Let's now understand the taxation of dividends of mutual funds. Dividends provided by all mutual funds are added to your income and taxed as per your income slab. That's all for today. Thanks for watching.